Hello, good morning, guys. Welcome to AlexG FS channel. All right, so if you have never been here, this is lecture 6, and this is a lecture slide. It's a 10 lecture slide, solid ones that will help you analyze the market like a trader, a very good trader, a pro trader. So basically, this is a beginner guide, and now we'll advance to the pro guide too after the beginner lecture. All right. So in our previous slide, that's lecture 5, we discussed about how to enter into a trade, the types of analysis, fundamental analysis, technical analysis, sentiment analysis, and also indicators. All right. So in lecture 6, what are you going to be talking about? You are going to be talking about why candlestick matter, popular candlestick patterns, key details of a candlestick, and also using candlestick in trading and candlestick risks. Okay, so let's begin with the why candlestick matter. So now candlestick matter because candlestick is a visual representation of market psychology, and it helps identify patterns and potential reversals. So it's also more informative than the comparing it to the line and bar charts, and it's widely used, which makes it very reliable and it's easy to analyze. So basically, a lot of traders use the candlestick charts because it is widely used, and also it is more informative. It gives more information on what is going on in the market. So if you want more information on what is happening in the market, line chart doesn't give you, because line chart is basically the the line of the close prices, the line of the close prices of a period of time. Do you get it? But the candlestick, it gives you more information like the high, the low. It also gives you more information on the size of the body, how many buyers or sellers were available in this period of time. So it gives you all that, which makes it very reliable and also easy to use. And it's also more important, let's give you a visual representation of market psychology. That is how the buyers or sellers are reacting, maybe around maybe psychological levels, or showing rejection of price or acceptance of prices. Yes. So the next one is the popular candlestick patterns. So the popular ones are the doji. So the doji is a market indecision candle. We also have the hammer candle, which is bullish reversal signal, and also shooting star, which is also a bearish reversal signal. We also have engulfing, which is strong reversal signal. We also have morning star, evening star, and also have trend reversal indication. Okay, so these are the candlestick. So in our next lecture 7, we are going to talk more about the doji, how it works in the market. So you get to understand this part very, very well. You can also do your research on the candlestick patterns and how they react in the market. So these candlesticks are very important, which means that it gives us more information on what is happening in the market. Example, the doji market tells us that the buyers have come to an indecision period, whether they want to continue, they don't know whether to continue buying or leave the market. Do you get it? So this gives us an indication that maybe the buyers are now okay with the price. So now the sellers are coming in to sell in the market. The hammer also give us a bullish reversal signal, and also the engulfing is very, very important, giving us strong reversal signal. Okay. So we have key details of a candlestick. So the key details, as I mentioned, the body size of a bullish candlestick, and also the body size of a bearish candlestick, and also the size of upper wick, and also the size of the lower wick, and also the time frame. So now when the body of a bullish candlesticks, which we talk about that the bullish candlesticks means that a green candle. So if it is in a green candle, it means that when the size is bigger, it means that there are a lot of buyers in the market. But when it's smaller, it tells us that there are small buyers in the market. Same as the bearish. When a bearish candle is big, it means there are a lot of sellers in the market. But it is small, it means there are small sellers in the market. And also the size of the upper wick. So when the upper wick is very long, which means it is a rejection from price. Rejection from price. So it is a rejection from the sellers. The sellers are saying, no, this price, you want to sell at this price. So when price gets there, you see that there is a rejection. A lot of sellers come in the market. And the size of a lower candlesticks also tells us that there are a lot of buyers out there. The buyers are saying, no, this price, you want to buy at this price. So the moment the price gets there, you see a lot of buyers coming in there. So this tells us a rejection from the buyers. And the upper rate tells us the rejection from the sellers when it is too long. But when it's too short, it tells us that there's less rejection from buyers or sellers. So the time frame. So the candlestick also tells us the time frame, which means that each candlestick represents the period in which you are in. So if you're in a 4-hour period, it means each candlestick or each candle in the market represents a 4-hour candle. So each of them is 4 hour, 4 hour, 4 hour. So if you are in a daily time frame, it means each candle represents one day. So each day in the market. So each candle represents one day. If you're in a 5-minute time frame, it means each candle is made up of a 5-minute time frame. So each candle is 5 minutes, 5 minutes, 5 minutes, 5 minutes. Same as the 1-minute time frame too. Each candle represents 1 minute. Okay. So using candlestick in trading. So if you want to use candlestick in trading in order to improve your analysis, you have to combine it with key levels and use higher time frame for strong signals and wait for candlestick closure. That's very important. Wait for it. Confirm with other tools or indicators. So if you want to use the candlestick very, very effectively, please do this, especially wait for the candlestick to close and also confirm with other tools or indicators and use higher time frame for candlesticks. So please use higher time frames for candlestick for strong signal and also combine it with key levels such as support or resistance levels. Or you can also use the Fibonacci retracement tools. Alright, so candlestick rigs. So there are a lot of risks in using candlesticks. So trading with candlesticks can bring great results to your trading strategy, but there can be some risks which are listed below that may not play out as anticipated. So candlestick risks, we have breakouts, we have liquidity trap, we have news candle, we have dodgy candle, and we also have higher time frame patterns. So these ones are carefully listed here. These are things that happen in the market. So you enter into a trade, you are right about everything, but what you see is that a wick just took you out of the market. It just took you out of the market and went into your direction. And there can also be liquidity trap, which means that there is a sharp spike. So there'll be a sharp spike in the market that may take you out of the market or lose in the market before maybe it goes into your right direction. And also news candle. So I basically want to advise you that stay away from news. So when you know that there's a news, please stay away because there's a lot of volatility when it comes to news. And sometimes when a news candle just finishes, you see that at the end of the news, you may think, oh, that's okay. That's why I can continue trading with my normal way. But what you see is that there will be another or there will be other spikes that comes after the news. So news scandal can be very, very frustrating if you have never traded some before. So I'll just say stay away from news for that day. Don't think if the news scandal is okay, then you can enter that. No, don't do that. Stay away from it, please. If you have never traded, if you don't trade news, yes, if you don't use fundamentals. Okay, so now dodgy candle. So dodgy candle also can be very, very confusing. This is because sometimes you may see a dodgy candle at a support or a resistance or a key level, which you think, okay, so which means there's an indecision and maybe the other party wants to take over. But what you realize is that it comes in a continuation. So it can be very confusing with news candles. So that's also a risk when you're trading with candlesticks. Yes. So the higher time frame patterns. So higher time frame patterns also can be very, very wrong. So sometimes we see the higher time frame, a pattern on the higher time frame is very strong, but sometimes it's not always the case. Or sometimes you see a nice pattern on the higher time frame, and once you realize that when you trade it, it just goes against you. And it is very, very frustrating doing that. So these are the risks in using candlestick charts. But overall, I think trading with candlestick has been very, very good or beneficial to me. So I think it is good too. And also the tips. So now what I want you to do is that if you have time, please identify all these candlestick patterns in the chart and how the market played out. And also choose 2 or 3 patterns candlestick. So choose 2 or 3 candlestick patterns and master its formation. Just master it, how it forms, and be consistent with those patterns. And also identify some candlestick risks that you may see if you are going through the market. All right, so I hope this lesson went well. I don't want to take much of your time. So what do you really learn? So we learned about why candlestick matter, the popular candlestick patterns, key details of a candlestick, using candlestick in trading, and also the candlestick risks. If you are new here and you haven't subscribed to my channel, please click on the subscribe button right down there, please, and also like and comment on my video. So basically, we are at the end of this lesson, and I hope you enjoyed this lecture. Okay, so thank you very much for following me through. This is the Make Money Online Forex Trading Beginner Guide 6. Thank you very much for being with me. Okay, bye bye.